So this is fun. So regardless of what happens here, this will be archived. Can anyone hear me? You can hear me? Oh, wow. Okay, hold on. Okay. Great. So if you can't see me if the screen's not loading, just refresh the browser. And that should take care of it. Oh man, what a nightmare. So apparently, I don't know what happened with my internet, but looks like I'm still pushing clean right now. Something got screwed up. I reset my modem, reset my router. Oh, the joys of trying to do something that has never been done before. Yeah, if you can't see the screen, then just refresh the page and you should be good to go. So we're still running clean here, which is good news. And I'm just leaving it on my desktop here until we have something consistent for at least 2 minutes. God, that's annoying. I'm so sorry about that. Clearly my internet is botched up here, so hopefully resetting the modem, resetting the router did the trick. So it looks like I'm still clean. Okay, I'm going to open back up trade log here. We're still clean. Rejoice. All right, 3 minutes of running clean. That's a record. Gotta love it tonight. So funny because I streamed yesterday afternoon, yesterday morning, had no issues. Did some Saturday streaming, getting ready for Monday, tomorrow night, and had no problems at all. So looks like we're clean now. So we're gonna roll with this. Again, this will be, well, once we get the actual stream done, the broadcast done, it will be archived. I am going to post on Stock Trading to Go. But yeah, okay. So where were we? We're in all trades, and I went to 2014, and then I analyzed my trades. So wins loss. So my win ratio of 27%. This is a little lower than what I see usually. I usually run in the low 30s. It's my batting average. And then 72%. And despite this, I still made $5 grand this year, again on a $60,000 portfolio. So not bad. And this is just a testament. This is a good confirmation for me. If you cut your losers short and then let your runners run, you can still make money despite only winning 27% of the time. Some of the best traders do not win more than 50% of the time. And if you have a batting average over 50%, then you should just be killing it just because of proper position management. My average winner, $95. Average loser, $84. Average percent gain, 2.34%. Biggest winner, here's another metric to look at. What's your biggest winner for the year? So my biggest winner for the year was $6,600. We're going to be looking at that. And then my biggest loser was $3,100. So that's always good. My average holding period is less than a day. I run 2 strategies. I tried a bunch of different strategies this year. I'm always testing new stuff. And this year it bit me just because I would get frustrated with not seeing a lot of action. I had a phenomenal start to the year. I was killing it, doing great. And then I got antsy and I started over trading and then started justifying reasons why, oh, let's try this new strategy. This will work. And then I would just either over trade it or bet way too much on a trade, and you're going to see that. You have no problem shedding light on my mistakes. And so if you factor in total commissions, I don't. But if you factor in total commissions, I actually lost money this year, or let's just say I was flat. I don't factor in commissions right now just because I'm trading a smaller portfolio. For me, it is about just learning. It's about trying new stuff. And to me, if I can make money or break even while learning and making 440 trades, then I'm still moving forward. You know, trading is a lifelong game. You have to look at that's the way I look at it. And average risk, $184 per trade. So this means takes in consideration my stop loss. So if you bought a stock at $100 per share and you bought 100 shares, and you put your stop at $99, whether it be a hypothetical stop or a mental stop or a physical stop loss order, then at 99, then you are risking $100 on that trade. So with a $60,000 portfolio averaged out, this is the position size I typically go with, which is pretty small. Actually, if you look at from what I've read, anything around 1% per trade, 1% risk per trade is fairly standard, and then anything up to 2.5% is very, very, very aggressive. So let's put that in perspective. For me, with $60,000 portfolio that I have allocated here, to risk 1% on the trade would mean I'd be willing to lose $600 on every single trade that I made. And in this case, I was willing to lose on average $184 on every single trade I made. And again, for me, it's just it's a learning thing, taking it slow. So I try to keep them low until I see those really, really great setups, and then I'll scale in, which we'll see here as well. There you go, average equity at risk, 0.31%. These are some R metrics, and this is for if you follow Van Tharp. Really recommend reading it. How to trade your way to financial freedom. Talks about creating a system, and Van Tharp is the creator of like the R. It's another way to finding risk. But if you haven't checked out Van Tharp, it's in my top 20 books. How to trade your way to financial freedom. Highly recommend reading it. And then mistakes. I track all my mistakes. So out of these 400 mistakes, 107 my trades I had a mistake on. So for me, I classify mistake as either not following my rules or not executing a trade correctly, or more or less breaking rules. And I try to keep my rules extremely picky. The more fine-tuned you are, then I found at least for me, the more successful I am. So 24% of my trades were mistakes. And naturally, this is going to be a New Year's goal for me. I want to bring this down. If I can get this to, say, 10 to 15% or even 15 to 20% next year, then obviously I'm going to be trading more efficiently. And the less mistakes you make, then the better off you're going to be. So here's my P&L for the year. You can see here that I had a phenomenal start to the year and was rocking and rolling. And then some of these dips here are just really poor trading decisions, which we're going to go into. We're going to walk through them one by one. And you can see how these big bumps here are just letting my runners run. These big winners. And even in here like this, this might be 10, 15 losses in a row, but it's not a big deal. Because when that big trade comes in, I'm going to move it back up. So, and then performance against the market. I was actually keeping pace with the market until this big rip at the end of the year. So for my $60,000 portfolio, I was right neck and neck, and I was clearly outperforming to start the year. I was doing fantastic, and then just lost it. There's different stuff going out there. Again, I only trade when I have free time. So for me, it's, I might miss a couple days of the week, or I might miss a week or I might miss 2 weeks. It just depends what's going on at work. But just for perspective's sake, we take this for what it's worth. Against them, I use the S&P 500. That's the biggest, most widely used benchmark. I did underperform the market averages this year. So I was at around 8.6% return, and the S&P as of now is at about 13.7%. Again, this rip right at the end of the year, those 3 days, I missed that. I was sitting heavy in cash, and I missed it, and as a result, then my portfolio did not end up as well. So, but overall, though, I'm very pleased with this. Again, the way my mentality is that if I can make it to the end of the year, if I made money, terrific. And in this case, I did. That means I'm learning. So I got to make 400 plus trades and then continue to grow as an investor, as a trader. Starting next year, I'm probably going to start with the same $50,000 allocation. Maybe that's 60, or maybe closer to 70, thereabouts. I'm trying to start around the same mark. And then if I'm hitting well or my stakes are low and I'm feeling good, then maybe I'll put some more money behind it. But even towards the end of the year, I was lowering the risk per trade because I knew I wasn't hitting correctly and I was making poor decisions. So first and foremost, that's what I do every single year. Look at the raw data. What is the raw data? So in this case, I underperformed the market averages, but overall I had a decent year, still made money. When you factor in commissions, I was flat on the year, but there's a lot of different ways you can cut on commissions. And again, on the $60,000 portfolio, trading 400 times, you can see how that can impact a portfolio pretty significantly. But if I was trading a $500,000 portfolio, then a couple $1,000s in commissions is nothing. So it's all relative. So then let's go in here and let's look at the biggest winners. What do you guys want to start with? The biggest winners or biggest losers? Do you want to start with the good stuff or the big mistakes? What do you want? Losers? And vote for losers? Anyone else? We got one vote for losers. No one has an opinion? Do you want to see the good stuff or the bad stuff? Oh man, losers. Okay, that's 2 votes. Give me the bad first. Losers. Okay, losers it is. So what I did here is I just went to my portfolio, went year to date, and then I'm looking at the largest losers on the year. And then you can sort it by tags as well. I use tags for strategies, but in this case, we're looking at all the trades, which means all my tags. So my number 1 largest loser on the year was PFIE, and this stock here, so I bought it in June and then I sold it in July. And this was when I was in poker, they call it tilt. When you're on tilt, you just get emotion, you make bad decisions. And so PFIE, I was buying this stock at $5, and let's see, let me pull up the daily here. Okay, so beautiful chart on the daily, and the stock was it just switched over from the pink sheets to being on the public exchange, had this beautiful breakout, and I started buying here at $5. And the first thing to note here is I was trying this like new strategy. I'm like, all right, I haven't been hitting a lot of trades. I'm gonna just buy the stock, and instead of using my ultra tight, like I'm only gonna risk $100 a trade, I'm gonna risk $3,000 a trade right there. Big mistake. So talk about going on tilt and being undisciplined. Here it is, guilty as charged. So I decided that I was going to buy this stock on this pullback. It had clear, great fundamentals and This stock is going to be great. I'm getting it around that's technical buy point by Kansom standards, and I am going to just give it a ton of space. I put my stop at 350. And so I was risking $3,100. Instead of 180, I was risking like 300 times that, or 30 times that. And then I cost averaged in as the stock was moving up and then down. Another mistake. You'd never want to cost average down. Stupid. Took on more risk. And then ultimately, I called it uncle at, instead of 350, $4 and just took the loss. So it took the hit, $3,100, worst trade of the year. And I have no idea why this wasn't even checked as a mistake. So there you go. So then here's my notes on it. I found a report on briefing.com, and this is some information on the company. And then I had tagged it with this long strategy. And then here's some of the other, there you go. So I had this nice base, and then it kind of broke out, a little shakeout here, both bull trap, and then it broke out again, ripped, nice volume, and then it fell back in. And right here, I should never have been touching the stock to begin with, but there you go. It breaks back into the base, very bearish. And let's see at the end. Yeah, there you go. So there's my sell right there at $4. Called it uncle, took the hit, and walked away with a $3,000 loss. Largest loser of the year. Okay, number 2, AVCVF. This was actually like a pink sheet stock, and it's some alternative energy, American Vanadium. They do like cell storage, like storage technology. Yeah, big ouch. They do like storage technology, and this is a penny stock. And this was also when I was on Tilt. I created this new strategy. I'm like, oh, green long. Look at this. I'm going to make this new strategy, and I'm going to call it green long. And once again, theme of the day, instead of risking my average 100 to 200 bucks a trade, I'm going to risk $2,000 on this guy. I'm just going to buy this stock, and it's going to be great. And let's see, here's my buy point. Oh, look at this. There's nothing here. Broke below 45 supports in this long channel. This is just trash from the beginning. And broke all my rules. Took $2,000 of risk on it. Ended up buying, this is all the same day. And then sold it off. I sold half at 30 cents when I was already down 30%. And then I sold the rest at 21 cents. It's just disaster zone. Here's the loss. There you go. So there's my, oh man, this stock's totally going to be fine. And I just got thrashed. Just absolutely taken to the cleaners. And again, there you go, 2,800 bucks. So boom, out of 400 trades, over 400 trades for the year, I end up two big losers where I lose focus, get frustrated, and then take on an ungodly amount of risk. It ends up costing me 6,600 bucks. So, or $6,000. So let's put that in perspective. I was up over $5,000 in the year at the end of the year. $6,000 in a $60,000 perspective. That's 10%. So just avoiding these two mistakes, that is a 10% boost to my portfolio. I would have clearly blown out the market averages. So for me at least, this is a great reminder to just, if the market gets tough, just step away. Just step away. I need to remind myself that it's not worth it. It is not worth taking on more risk and stepping away just because you want to make money. It's not worth it. And I paid for it dearly here. So first 2 stocks, and let's go down to Mac. And oh, this was an interesting one. So I love these biotechs. Those who watch my stream know I love the biotech sector right now. And this company posted these great results here. Phase 3 trial news, massive volume per hours, massive shares short. I thought this was going to be the big one. So if you look at this, here's this stock. Look, this guy's from 450 up to 890. This stock posted big news, and so I started buying into this thing. I'm like, holy crap. There was like something like 20 million shares short of this company. So this thing was ultra short. There's going to be a massive squeeze into the open. Look at all this volume. I'm like, this thing is going to the moon. This is the big one. I'm going all in on this one. And luckily for me, I never got too far in my scaling. So I started buying it, about 500 shares at $8, 500 shares at $8.30. It's cruising up. I'm already up. It was almost 5% in a matter of, whatever. Oh, that's times off, but pretty quickly on. And then what happened was, and this is actually created a new rule for myself to never buy these big movers pre-hours because they can reverse in a heartbeat. So I added more. So I was at 1,000 shares long. Again, this is a 1-minute chart. So you can see here it's 7 a.m. or 6:30 a.m. Stock popped. This is where all the news was. And then heading into the market open, it started selling this. 1 million shares sold in the first minute of trade. Somebody was dumping and taking profits here. And now I'm in trouble. So here I am with this $7 stop. I was averaging buying in around $8. I wouldn't do trade. Yeah, there you go, Dr. Chiz. I was averaging in around $8, and my stop's at 7. This thing starts reversing on me before the market even opens. I put myself in a terrible position. Why put myself in that position? Why not? I'm risking $1. That is over 10% on this trade. I was risking over 10% because I was so confident this thing was just going to blow to the heavens. And then that's what happens. So stock opens up 765, it rips, just gets sold off. Sold off. Here's the full day view. And I got stopped out of this one. We're going to end up getting out. Bought more at $8, bought more around $8, and then I sold it all at $7. I kept at least true to my stop, but I sold it all at $7. And let's see, I should have my sell stop. There you go. Stock opened up, and then I actually had to look at it. I had a buy stop on this thing. I'm like, if this thing breaks higher, I'm buying more. I was going to scale into this thing until I could not scale any further, and then boop, there he goes, down to 7. So in 7 minutes after the market opened, I already hit my stop, and I was shaken out, and there it goes, another $2,600. So this one, to me, actually, I was following my rules. I thought I had I thought I was onto something big here. Again, the circumstances that set this up. So let's look at this stock. Here's this biotech company. It's worth 720. Well, now after this, $720 million. Heavily short. Big phase 3 news data. Gaps up pre-hours. I'm thinking there's accumulation going on. There's a big accumulation. Institutions are stepping in. And then what do you know? I start buying in, start scaling in. Thank goodness I was buying in small chunks. Place my stop, and then within the first, what was it, 7-8 minutes, I'm already stopped out. And that to me is just it's a lesson on, well, one, I was taking on too much risk, too much scaling too soon. Not necessarily because, well, let's see what I had. I ended up getting it to $20,000. I was prepared to put my whole portfolio in this. My theoretical, my whatever. At this point, I was probably around that $60,000 mark. So I was 1/3 of my portfolio in, and if the stock was really moving, I would have went out a margin on this. So I get 4-to-1 margin on the day if I'm trading intraday, and I get 2-to-1 for overnight. So 20 grand into that on a potential of $240,000 is pretty small. But this says it all. So for my average risk, look at these losers. I'm only risking, my average risk is less than $200, and right from the start, I was already risking $500 and $600. I just kept taking on more risks as I scaled in. So, so the mistake on this one was just not understanding my strategy well enough. I thought that, hey, this thing's pre-market, it's gonna be squeezed, it's gonna be a big winner, da-da-da. I took on too much risk, and I didn't wait for the stock to set up. And those who have been watching my stream, you notice that now I'm a lot more patient. I wait for the stock to open up. Let's see what happens at the open. Let's see how the institutions handle this. Let's see what happens when the big volume comes in. Let the stock settle out. Let the stock create a base, and then start buying in. And I paid for it here. Number 4, XGTI. So this was a fun one. So I had this idea of a strategy where these stocks would have these monster days, and I love these stocks. I still try to trade them today, but like this stock went from $2 up to $4.60, and I was thinking to myself, okay, I have a theory that these stocks end up running up these massive runs into the day, and then they get squeezed further overnight, and then they gap up at the open. So brilliant me, so you're buying 5,000 a day. So I put a little less than 10% of my portfolio in this, bought 1,000 shares right at the end of the day. Strategy is simple: buy the close, sell the gap open. Based on my research the past year, these gap higher over 75% of the time after the first day. And here's my notes. Look at all these mistakes. Let's see here. Sell. So we moved to a new house. We bought a new house, and what happened is I had an appointment at 8:30. And I went long, and then I didn't get the check to quote until around 10 a.m. So I missed the whole pre-hours. I missed the open, and guess who did not have a stop loss on his stock? Either that or it traded through. Maybe I had one, and it traded through. Brutal. So trading through means that if you have your stop and then the stock gaps below where your stop is, the price trigger never hits, so your order never hits, and then you're stuck in the stock. And I got taken to the cleaners. And so here it was. This is another theme I've noticed this year. It's trying new strategies. Why would I take on $1,000 of risk when I'm trying a new strategy if my average is under $200? Why? It's just stupid. It's not necessary. So nice reminder, if you're going to take a new strategy, revolves around opening bell and exit immediately. Be ready to exit immediately. Even if I had the stock gap higher, by 10 a.m. it could have filled it already. Epic fail. Epic fail. And then I found out mistake number 2. This wasn't the first day of the pop. So all this research, like, oh, 75% of these things pop at the open, blah, 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 was on day 1. So after day 1, these big runs, then they squeeze further overnight, and it's all this short squeeze game. And I didn't even realize it was day 3. And day 3, as for those who get really technical, day 3 is a night and day difference than day 1. A lot of these stocks that pop and run, they might have a 3-day run, and that's it. You do not want to be, in my case, buying, heading into the close of day 3, and then giving it $1,000 of risk in the downside. You know, yeah, Sykes was shorting. Sykes shorts penny stocks. It's a high risk game. He's successful at it. Either that or, you know, everything else. So I give the guy credit. Some people do it successfully. Other people get their account blown up, and there's significant more people that get their accounts blown up doing it. So at any rate, here is a stock. Look at that. Day 3 blew up, and I even dropped some F-bombs in my own notes. And yeah, just stupid. So that's big loser number 4. Another dumb trade. Fannie Mae number 5, $975. Well, short everything with penny stock with stupid rallies. Yeah, you can short everything penny stocks with stupid rallies, but where's your stop on that then? If you short, your maximum loss potential is unlimited. If I buy 1,000 shares and the stock goes to 0, I can only lose $5,000. If you short 1,000 shares and that stock gaps up and doubles overnight, you're down $5,000, and the stock can continue to run higher. So shorting is extensively risky because you have unlimited squeeze potential, and that's why these stocks, we're looking at Lake. That's why stocks like Lake ran all the way up to $33, wherever it was, from like 2. Brutal. All right, so Fannie Mae. This was actually ended up making money on this. This was one of my biggest winners of the year. I lost $1,000, but I made it back really quick. So Fannie Mae and Freddie, look at this. This base here. These were really dramatic stocks this year. So here was this base, and it actually this is a Minervini setup, but kind of squeezes in here, tightens up, and then blows up. And look at that reversal. So intraday, if we go intraday on this, there it is. And for those who have traded Fannie and Freddie intraday, what happens with these stocks is the orders, since they're traded in the OTCBB, and look at the millions and millions of shares of volume, that the orders get delayed. So if you put in a market order on this, which you can't, you have to use limit orders, your order could be delayed by upwards of 30 seconds. It's insane. It's insanity, but there's a ton of money to be made doing it. So at any rate, bottom of my point was I was waiting for this stock. It just sold off. I'm so patient, waited. Here's this big volume comes in. Someone snatched up 4 million shares and stabilized. I bought in here, and then as soon as it stopped, reversed, bearish, almost bearish engulfment, but started reversing back down. I put my order in to sell like in here, and it literally took almost 2 minutes for my order to fill before I got out. But there is a happy ending to this, as we'll see once I go my biggest winners. So I lost $1,000, and actually this was a success for me. No mistake on this trade because I stayed disciplined, got it the next time, and I made like $4,000 off of it. But at any rate, I put $22,000 into this one, so a little under half my portfolio, and portfolio without margin. But yeah. Okay, so that was Fannie Mae. That was a day trade. Again, that did end up making money, so that trade was fine. RGDX, this was another new strategy I came up with. Like, hey, let's try this again. And whoa, look at the theme. It is what it is. My biggest losers of the year, I lost whatever it was, right? I only won 27% of the time. But when you filter out those biggest losers, you find those patterns. And once again, here I go, saying, oh man, I'm going to try to buy this stock long. I'm going to give it a lot of space. I was clearly on tilt again. And so I'm going to give this $1,500 of risk. Shake my head. Learn from my mistakes. Do not lose discipline. So here was my buy intraday, and the stock gapped up on some news. Let's look at the See, here's the chart daily. I bought in here on this gap up. So stupid. Just so stupid. There's nothing here. All this overhead resistance. And here I am like, oh man, this stock gapped up. I'm just going to buy it, give it some room. And I'm going to make a lot of money just because I am going to. So there goes my new strategy. And guess what? I traded this strategy one time. One time. The strategy made it for one trade, and that was into that because then I realized how big of a dingbat I was on it. And just clearly terrible stuff. So that was that. And then the trade, oh, that was the buy. Where's the sell? Yeah, there it is. Down to $1. I got stopped out, and that's that. So once again, was that out of my top 10 trades, or out of the top, what are we in, 6 or 7? 4 of them were trying new strategies, and then just more or less epic fails. You wanted, I feel like I'm on mute. Yeah, it's a chat room, so you're on the stream. You can chat away in the chat room, and that's how it works. I will be doing a joint stream with someone tomorrow night, but yeah, you can create your own stream and start streaming. You can talk about whatever you want. That's the whole point of Ticker. Anyone can stream. So create your own stream, Flibber. Give it a go, man. Just start your own stream. Start doing your thing. I highly encourage it. That's our whole goal. I want to see hundreds of people on here streaming this stuff. So for now, you just get to listen to me talking about my biggest losers and winners of the year. Okay, so that was RGDX, and then CTIC. At least these are going down now. So this was a $350 loss. And what did I do here? Apparently I was pretty active on this one. Let's see here, third attempt. Okay, so I tried the stock a couple times. So at least here, this is normal risk. Here we go, normal risk. $125, I added on more risk as the stock was moving up. That's good. You never want to cost average down, cost average up. So here was, the stock broke, I got in, I took on more risk. Oh, and then I just got stopped out, $395. Okay, so this is just clear. Stock reverse, game over. Happens. So there goes, the stock broke. So here's my, this is a 5-minute chart, 2 days. And then the stock broke $4, I got in. The stock broke higher highs, I bought more. And then it ran up, and let's see where the reversal is. So this stock ripped up to 422. Ripped up to 422. And then, boom, reversed right back down. And that's okay. I gave it the space. I kept a really tight stop on this one. And then I got stopped out, and that was that. So that's a fine trade. But it's one of those things where it is what it is. Let's look at the daily. Yeah, so there's that break. Stock had actually a nice move up from whatever 217 to whatever it is, over $4. Consolidated, creates a nice little handle, and there I was. I bought the break of 4. Nice day, big reversal. I was shaking out. That's that. I walk. I don't know what I'm having this stock after, but that's that. So that was a good trade, good discipline, and proper risk. 1, 2, 3, 4, 5, 6, 7. Pan W. So these are probably going to be, see how the change here, the big theme for me, at least I'm taking away from this, is right in here. Anything over $1,000, especially over 500. Out of these, 1, 2, 3, 4, 5, 6. 6 of these I tried new strategies and they never panned out. And tried them once, lose a couple grand because I take on way too much risk and I get my rear end handed to me. Don't do the same, make the same mistakes I did. And again, just to drive the message home on my lack of discipline, that is these two for sure. XGTI, RGDX, so that's a grand. That's a grand. Mac was a different story, and then another $6 grand. So that's $8,000, 4 trades. Let's go here, analyze. I'm going to look at this again. I had 321 losers, yet I still made 5 grand. So 4 trades, just 4, I lost 8 grand. If I would have avoided those mistakes, which is my goal, New Year's resolution, try not to go on tilt, stay disciplined, that's $13,000 in profit. That puts me up, clearly outperforming the market on 60 grand. that would be over 20. It'd be over a 20% return. There's a message home. Right there. Right there. Run your performance. Run your performance. Sort it. I don't care if you use an Excel or use TradeLog. Go sort by those biggest losers. Look at them. And you'll see the message. There's a 4 trades, $8,000 that I could have had back. And I had over 200. I was disciplined. I just want to drive the message home. 321 losses. I was disciplined under only $500 losses. So 6 trades that were over 500 bucks. 6 out of 321. You lose focus for 6 trades, you're going to end up like me. That costed me the year of outperforming the market and having a home run year. And on top of that, think about this. I'm trading a small portfolio. Instead of 60 grand, what if I was trading everything I had? That could have been $500,000. What if I was trading $1 million portfolio? Unbelievable. Unbelievable. So great example of just sorting those trades. And I lost discipline for 6 of them, and it costed me my year. Let's go to the positives, though. Let's look at these big winners that I had. And you notice there's a lot more far and few between. Look at all these winners this year. How many trades did I have over $1,000? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades over $1,000. 10 trades made over $1,000. Big difference because I let my runners run. So let's look at number 10. Let's make it more dramatic. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Number 10, best trade of the year, Baba. And this one was a wild one. Let's see here. This was right after smoked this trade. Give myself some props here. Gotta love that positive reinforcement. Took a couple stabs at it, trying day trades, was okay. Stock finally broke 90, massive washout, popped back to above, pulled back, had insane value, took 600 long. So I went like all in on this thing. I went on margin for this guy, $81,000 long, but I knew it. I knew it had great odds. And here's the kicker. Check this out. Look at my risk. I only risked $83 originally on the trade. I then added on to it. I then risked $116. The whole trade, despite making $1,000, I only risked $200 on the trade. If I would have risked $1,000 or $2,000 like some of those other stupid mistakes, that would have been a monster home run. Unbelievable. Pounded in the head, Blaine. Got to stay disciplined. So this is a great example of winners. So I bought in. I then scaled in. I was confirmation scaled in. Let's look at the charts. Here it is. I don't know why my buy and sell points aren't. Let me see if I can find the one that has my buy and sell points tagged. Usually I open these charts in Paint and then I put like purple and orange lines. Looks like I didn't do that. Okay, so let's rekindle here what happened. Baba hit 99, reverse down. Note this is intraday. And yeah, 1 minute chart. And then the stock was hovering on this $90 mark. And look at this volume start picking up. In fact, was this his IPO day? Yeah, this was the IPO day. So this was Baba's IPO. This was the Baba IPO. So stock falls down towards 90, and it just kept, look at this support in here. Just cannot break 90. Tries it again. And then boom, finally the stock breaks 90. Look at that volume. That's 5.5 million shares. 5.5 million shares traded on this stock in a minute. Talk about a washout. That's a washout. That's a washout right there. So the stock then, so this is where I got interested. In fact, I bought right here. I'm like, this thing's going up. It's going higher. And I have a low at $89.95. So I bought the stock, what was it? $90.08, $90.09. So I buy the stock right in here. There's a 4 million share washout. Look how small that bar is. Buy my 600 shares, add more on the higher highs, and the stock just opens up. Look at that. Stock cannot break 90 support for the life of it and just opens up to 92. And then I just started selling into it. Look at this. Sell 300, sell 300, sell 150. Shed the last 150 at 91.59 to started coming back down. Average selling at 91.34. Great trade right here. This is value. This is what I look for. That was trade number 10. Baba's IPO. Good day for me. Apple. Number 9. Let's see what was going on here. This was trading long. And, oh, this was when Apple posted earnings. So this was before the reverse split. And I loved this stock. I love this trade because Apple posted earnings. Let me confirm it was earnings. Make a mistake. Long, long Apple. Expand this down. Let's have an opening bell, technically. Okay, yeah, so I actually bought this stock. I shook myself out of the trade. And I got back into this position. So Apple, this was the gap up, and the stock was kind of shaking here. But after this first day, and then now we're in the second day, the stock was holding up. And everyone was like, Apple is, this stock's not going to, oh, there's no way it's going to hit new all-time highs. This is not going to happen, da-da-da-da. You know, this stock's not going anywhere. I mean, from you know, Yahoo Finance homepage to any traders you're talking about to Twitter, you name it, no one thought Apple was going to do anything. And I'm like, back up the truck. This stock's going higher. Look at the price action. So I started buying in, and I actually had a position. I bought it back because I just knew, I'm like, I got to be along this stock. So bought my 30 shares, and it risked 180 bucks. There's my discipline, $180, my initial risk. Put in 17 grand into it, and then it was the next day. I think this was on a Friday and then a Monday. And let's look at the original buy. So there's my buy. And then this is the next day, 428. So the stock then gapped up higher. I bought more, took on the extra risk, and the stock just ripped. I mean, Apple just went on a tangent, and we saw what happened. So I'm holding this thing. I'm feeling pretty good about myself. And a great example, bought it, disciplined, maintained my risk, added on once I had the confirmation of strength, took on more risk, but that's okay. That's okay. I had a nice mover in my hands, a clear-cut stop, and then the stock just went on a roll. So let me try to sort through my charts here. There you go. There's day 3. So here I'm buying in here. So the stock gaps up on earnings. Everyone and their mom is saying the stock's not going to do anything, it's going to be a dud. Next day, consolidates, does not even test the gap, and then breaks back higher, makes higher highs. I'm in this, gaps up the next morning, and then just rips and runs. So I'm in it. I'm feeling good right now. And then I just let it go. And there's that buy at the morning. So it topped out at almost 600 bucks. This is before I started selling off this thing. And this was a reversal for me. So I'll pull up the daily here as well, but we can see intraday. I'm liking the stock, continues to move up. Nice little bull flag here. Boom, moves up to almost 600 bucks and can't quite hit it. Kind of bearish. A lot of resistance here. Consolidates back down, hovers around 600, tries one more time, can't even hit higher highs, and just gets started, gets dumped. And I'm like, okay. I'm like, at this point, I'm already sitting on a nice winner, and I'm gonna give it a couple more minutes, and then look at this last hour. Stock goes from 600 down to 592. Not a big deal. It's what is that, 1.5%? And I decided to walk. Did I sell it all at once, or what did I do? Okay, so I sold half at 592, and then I sold the other half a couple days later when it retested 600. Let's pull up the daily. There you go. So ran up. There's that reversal bar. I didn't like distribution volume, and reversed down. I'm like, you know what? I'm gonna take some profits here. Sold half, and that's that win-win. I have this win-win mentality. All the Sangers and Minervinis and talk about this. So if I buy the stock and I'm up now, and I sell all of it right here. If the stock comes back down to my buy point, then sure, I win. But if it continues to go higher, then I lose. Then I lose. Because I am thinking to myself psychologically, oh man, it could have had a bigger winner, la, 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 la. Now, if I sell half, and then the stock comes back down, I took some profits, stock comes back down, I feel good because I took half my profits and it came back down. I got stopped out, no big deal. I still made money. If the stock goes back up and rips through 600 and keeps running, then guess what? I win again because I sold half, took some profits, and then the stock kept going. Now I'm capturing that upside. It's that win-win. You always want to be thinking win-win. So to capture that, selling half and letting the rest go is one way to do it. Nowadays, I try to actually sell in thirds and just shave it off in chunks of thirds and go that route. But yeah, so there's Apple, and that was a great trade. And then in Intuitive Surgical, this was a 3-day runner. FDA news comes out, love these. This is the pop. The stock pops from 440 up to 500 bucks, consolidates down, fine. Here it is around lunchtime. I'm buying in right in here. I nailed this stock. Bought 30 shares at $478 right in here. And what I liked about this, it is massive news. Resistance at 500. You're going to clear out some weak holders, people taking profits, la la la. And then the stock set in, shook out, nice little shakeout here, held up, tightened up price action, and then boom, started moving up, bought in, and then it just started going. And my stop on this was super tight. In fact, at this screenshot, I had already raised it to break even, but my stop was super tight on this one. There's my risk, 90 bucks. $90 original risk, and then I added on at 508, and I took on a lot more risk at this point. I ended up raising my stop, so I don't think I had taken on the full 672, but obviously it was clearly already up strong on the stock, and then that was that. And here's the daily. There's the initial day, the big pop. And then I think I got in the next day. And look at that. Just gaps up. Next day, gaps up again. And then just rips right through 500 resistance. And it's on the run. And I think this is day 2. Yeah, ran all the way up to 540. Look at that beautiful, beautiful intraday action. And then here's day 3. This was a 3-day runner. Stock just ripped for 3 days. 3 days. And so I sold half at the top here. In fact, I caught it pretty close. 534, 535. I sold half. Where is that? 540. Sold half. And then the stock just reversed. Look at this. Here it is. So there's my buy. Runs for 3 days. And I just got, what, from 478 up to 438. That's, what, 60 points? I mean, what more do you want? What more do you want in 2 days? 60 points, take it. So I took half off the table, and then I let the rest go. I put my stop at, whatever, some flat or somewhere around here at 490. And let the rest go, that win-win mentality. And in this case, the stock ended up coming all the way back down. 3 days up, 3 days down, boom, reversed the whole move, and I got stopped out. Now, this story has an even crazier finish to it because Intuitive Surgical ended up just tanking from here. The stock dropped all the way down to 400. In fact, let me pull up MarketSmith so I can pull up the chart. Okay, so here's Intuitive Surgical. I'd have to go back to this. Let's see. Let me go to weekly. Yeah, there it is. Rips up and just reverses back down. So we're talking about April. So let me go to 06. See if we can fit it on the chart. There you go. Look at this. 3-day just rips up. I sell half right here. 4 points off the top. I'm happy with my 60 points. Just walk on half. Put the rest flat on the rest. I get stopped out. And look at this. Stopped out. The next day, boom, big news comes in and the stop gaps. Just terrible. Terrible carnage. If you're buying long in here, you're thinking you're going to the moon. Next thing you know, you're in the poorhouse because this stock just gapped down on you. Absolute treachery. And fortunately for me, staying disciplined, I got my 60 points, sold half, stopped back down. I still win. Win-win. And then, you know, it gapped down and that was that. So that was a nice one. And that was a great trade for me this year. Number 6, 1, 2, 3, 4, 5, 6. Number 7 on the list, RCPT. And this was, there you go, original $100 of risk. Ended up getting 13R on this guy. I just ran it. In fact, I ended up buying once. And this was in our biotech. Stock gapped up. There you go. Big news. Big news. Gaps up. Take a position. Where's my buy on this? Let's see if I can find it. There you go. 97.55 thereabouts. And so where would that be? Somewhere, yeah, somewhere in here. Yep, right in here. Stock has a big gap up, runs up to 102, consolidates, tightens the price action. Day two. And then there you go. I bought in somewhere around here. Put my stop in tight. And just see what it could do, and this thing just ripped. Stock moved up to 105. Looks like I sold some at 102 on the gap, and then I let the rest go. Let's see here. Yeah, broke. Here's an example of me. I started selling. Yeah, towards the end of the year, I started selling in thirds. So there you go. Sold 35 at 105. Sold another 30 at 102, and then just let it go. Let the rest run, and I ended up getting 124 bucks for it. Let's pull up the daily. So it looks like I bought on day 2. Nice clean entry. I sold some in here. I put my stop too tight on 30 shares. I got knocked down here, and then the rest just ripped. There you go. Had a little shakeout. I dodged that. Lucky me. And then just ripped up. And at this point, I'm like, another example, what do I have in this thing? 30 points, 30 plus points. What more do I need out of this? I'm already up big on it. Sell out, walk, take the rest of my profit. And that was RCPT. GoPro, number 6. This was the climax run. This was an awesome one. I love triggering these charts. So here was GoPro, breaks out at its IPO, and had this nice consolidation in here. It's in this channel, broke through 50, and then just started ripping. And there was a huge squeeze. Everyone, if you were watching Twitter and Stock Twits in here, everyone was just getting squeezed out of their minds on here. And then it ended up running up to 70, and it pulled back. And it found support its 10-day moving average. There's this consolidation in here. And then right in here, it's right in this higher highs is when I started. I tried some. Let me pull up the intraday. There you go. So it had that highs, and the stock's holding up. Look at this. Stock's holding up, holding on these massive gains, and then it just Has a nice little bull trap in here, shakes out, but it squeezes right back up, and then boom, breaks to above 69. I'm in. So then the stock starts moving. I get a nice buy in this one. I'm tight on my stops, and the stock just starts ripping. And this is what I love. How can a stock go from 50 to 70 bucks and then consolidate and hold on to those gains? That to me is some very bullish price action. Very bullish. And the squeeze is still ongoing. Squeeze is still ongoing. So I got in. I had a tight stop on this. What was my risk on it? 100 bucks originally. I ended up adding on another 50 shares. And that's what I did. And it added on for another $70 of risk, and then boom, there it went. Where the heck did my chart go? Oh, let's see if I can find. I'm trying to figure out where I stopped in this. So my sell, here's another one, broke it into thirds. So sold at 78, 35, 70, and 80. There he goes. Nice run, 78. There's I shed 30%. Let me pull up the daily. There you go. I sold some in here in 80, right around here. That's 3-day rip. 3 days. Big volume. Big volume. Rips up through 80, and then I'm taking profits. And you never know where these climax runs end. On GoPro, it ended, didn't it get close to 100 actually? Let me reset this. Yeah, 98.57, 98.47. So I was right in here, bought it, ran it, and then was selling in here, and then it ripped again, and just was just a nice winner. So these climax runs, it's squeeze. This is all a squeeze. That 98 bucks, the amount of GoPro cameras need to sell to justify the crazy market cap is just not realistic. But if there's squeezes going on, there's millions of shares short, there's money to be made, and that's where I made the money on GoPro. I love climax runs. They can be hard, they can be tricky to find an entry, but if you can find a good entry, in this case, at minimal risk on this, then you're good to go. So something to keep in mind. Those climax runs can be really profitable if you know how to use them. All right, and next up here, 1, 2, 3, 4, 5. Number 5 on the list, Fannie Mae. So this was the follow-up actually to that trade where I lost 900 bucks. If not, it was this $5,800 winner in here. But this was wild, actually. This was not it. This was a daily setup. So here goes Fannie and Freddie, Minervini setup. Actually learned this from his. I actually learned this from his session. I went to it actually in South Carolina. It was really helpful for me. So this is Minervini setup. Nonetheless, you have this like slowly tightening of the stock, and it consolidates and trends horizontally, tightens up, volume drops off, and then boom, just breaks. And that's where I'm buying. I'm buying right there. Have my stop nice and tight, and you never know where these things can go. So in my case, the stock just ripped up. Look at that, right up to 340. I'm in at 316. I ended up only getting one buy in it. The stock moves so quick. It just moved. That was it, gone. And if you look at the daily, look at this stock go. Moved up, created a nice little bull flag, and hey Reb, thanks. Have a good night. Thanks for tuning in, man. Create a nice little bull flag, and then just rip right through $4. 3-day runner. Here's the 3 days again. Massive volume. After this break, I was in here. I think this is where I was buying in. And then it just moved. And then I think I just took my profits. How did I sell this thing? I sold half at 420 and half at 441. It's 36% in a matter of, what, a week? That's just awesome. Had a little more risk on this one. I guess I was feeling a little more confident, unlike my tilt type trades. But yeah, that was that. Great trade. And this stock actually went a lot higher too. What was this, Fannie? Let's pull it up. And then it absolutely reversed it all the way back down to the downside. That was right in here. And look at that. Boom, massive reversal. And then the stock has just gotten hammered since. So, kept disciplined. Never got my add-on buy, but this was one that just ripped right from the get-go. And nice winner. And then number 4, PBYI. This was our biotech stock. Theme of the year for me. Biotechs are big winners. I scaled in this over 2 trades, bought in, added more. And you're going to like this. You're going to see it right here. Big pop, big news came in, and the stock consolidated down over 3 days. And this is right here. This tightening action at 200 bucks is where I'm like, something's going on here. Because look at this. The volume's dropping off. Stock massive. Look at Wall Street has to refigure this stock out. This now is $6.7 billion stock. So the stock gaps up massive, pulls back, and it tights on this inside bar. And I'm like, all right, I got to try this stock. And it was right when it broke. Right when it broke the inside bar to upside, I bought in. Let's look at the intraday. There you go. There's that inside bar. Here's the 5-minute. I bought in right around here, and then I added in somewhere on here. And then, boom, just opened up. Opened up. There you go. Massive day, and this thing just started moving back up. And here it is. It hits 241 back to all-time highs in a matter of 4, 5, 6, 7, what, 9 days. And what did I do on this one? I sold half at 242. So this stock hit highs, and I sold half. I sold half, and I'm like, you know what? I just had a 40-point move on this stock. I'm going to sell half, ring the register, and then let the rest go. And then what ended up happening, hopefully I have my extra daily. I don't even have my extra daily here. I ended up selling at 270. There you go. So the stock, this is where I sold half. And then the stock pulled back and then gapped up. And right in here, in fact, I should have my notes on this. 825, 826, all about creating perspective. Okay, so this ITMN got bought out. Up there, they'll be acquired by whatever, RHHBY for $75 a share. There's a lot of consolidation that took place in the biotech sector. A lot of consolidation. There's a lot of buyouts. So this company gets bought out, and then PBY just runs on this. Look, a nice little mover from 244 up to 279 in 2 days, another 30 points. That's over 10% in 2 days. And so I'm like, you know what? If this stock was already taking a breather before this news, then this is a gift. I'm just going to take this. I'm going to walk. I'm going to close out the rest of my trade here and just walk and ring the register. And that's what I did. Sold at 270 and ended up being actually pretty close to the top. It retested it again, but look at this. Now it's back down under 200 bucks. Again, it's that, so this was what? 12-hour winner, so I did 12 times my risk. I risked 250 bucks and I'm making $3 grand on it. Great trade. Great trade. Another biotech. Number 3, PXLW. This is like Pixelworks? Yeah, Pixelworks. So stock is up on big news related to work in Apple, holding up well, and the massive volume spike and easy entry to try some with a clear stop, see what happens. So I actually risked $300, a little bit more than my norm here. And it looks like I bought it at $715. So this stock was a massive gapper from, what is that, $490 up to $7. Stops rips, and it was a midday, and it just popped. Let me see if I have a better view of this pop. No, that's the 5-minute. There's a big pop in here, and that's where I got my shares. Whatever, it's right in here. So nonetheless, this is a big bar. It's hard to see here. But it was a massive bar, and the stock would just move. So I'm like, okay, I'm going to try some. I bought what did I buy, 2,000 shares, wherever it was, and then I put my stop nice and tight on it, and the stock just ripped. Bought $7.15. My stop was $7. I was only risking 15 cents on this guy, Here's the daily. Look at that. Monster day. Big news. Monster day. And so there's your move up. Here you go. There's my buy. Shake out from original break. These are good notes. And then it consolidated. A little base here. Over what? An hour and a half. Broke to 725. Pulled back. I take my stab here. I'm like, massive volume. Look at that volume. Look at that bar. 300,000 shares. Someone is buying big. So the stock then, I buy my shares and it just hits the highs, consolidates around, and shake out, one last shake out back into its base, and then goodbye. See ya. 130. Not one, yeah, here you go. Not one major set of lower lows besides original consolidation after pop and end of day balancing out. Meaning that, look at this, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. And I guess it has shakeout towards the end of the day, higher lows, higher lows, higher lows. That's unbelievable. I just let it run, I let it go. And ended up being a nice winner for me. So I guess I sold half here towards the end of the day, ring the register, sell half, and then I wanted to see what the stock would do if it had any more legs in it. And what did I get out? 881, let's see what happened. Stock reversed after hours. Action, heavy distribution volume, locking the rest of my winner just to be safe. We'll look for opportunity to play during the day, maybe short op. Okay. There's the after hours. So stock closes at its highs around $9. I had already sold half in here. Let the rest go. The win-win scenario. And then after hours there it goes up to 960. And then it got to 980. Stock moving almost a whole nother point after hours. But look at this. Early morning hours, volume starts coming, this stock's selling off. I'm like, I'm out of here. I don't even want to waste my time. I have no idea what the stock's going to do. It's a guess at this point. So I sold it, took the rest off the table, locked in a nice winner, and the stock ended up tanking after that. Yeah, look at that. Boom. So this stock closes, gaps up here, reverses, I sell the rest right up here, and then right back down. Talk about a return trip on the elevator. So I got it out to 881, actually made even more money on it. $3,100, 10 R, so 10 times my risk of 300 bucks. That's good. That's a great trade. And that came down to, in this case, was just recognizing the intraday action. Recognizing it was big news, there's a squeeze going on, clear setup, and then took my shot, tight stop, and then it just ran on me. And all those higher lows, I just let it go. Nice winner. Number 2, FMCC, that is Fannie, and no, that's Fannie, that's Freddie. FNMA and FMCC, Fannie and Freddie. So this was a very rare, these are very rare setups, but when they happen, there's a lot of money to be made. And actually this one, I was so nervous when I was trading this, talk about managing my emotions. I was so nervous when I was trading this stock that I ended up taking well, in this case, I still put 50 grand into it, but this is like a once a year type of trade setup that comes around. So here's the drop off, and we were looking at the biggest losers. I'd lost on it originally, but thank goodness I stayed disciplined and went back at it. Ended up being my second biggest winner of the year. Stock drops off. There's news that came in, and here's the play. Look at this. Stock goes from 580, drops all the way down to 335. Here's where I played it originally. Look at that big volume comes in. You never know when you're catching a falling knife, you're going to get sliced and diced up. But in this case, I took my stab here because of the massive volume. And the only reason I did that is because I'd seen it once before. Fannie and Freddie did this exact same setup before. It was a monster trade, and people made a ton of money. So nonetheless, I tried it here, and I immediately got out once this thing reversed. I'm like, this thing's going lower. Boom, there goes reverse lower. And then right in here, look at that big volume spike again, up to 1.5 million shares. Look how I called this bottom right here. 340, boom, I'm in. Bought it. Used the low 335 as a stop. And again, these stocks were trading so active that when you would buy in, it would literally take upwards of 30 to 60 seconds just to get in or just to get out. That's how delayed the trading was. So this was insanely difficult to trade. And I'm not touting just the trade that I made. I'm touting it just from those who were in this war zone doing this. I was so nervous taking these trades because you get delayed like that. Look at this thing. I put my stop to sell on here. I end up getting down, sold out down here. That's another 5% from 440 to 420. High risk stuff. This massive volume comes in. I'm like, this is it. This is the bottom. I'm going to try it again. Bought in. Stock rips up to 360. Bought in again. And then it just broke out. I kept raising my stop, walking my stop up. And then I sold half right in here, this consolidation. And then I sold the whole thing actually right here, $4. I tried it again. Bought some at 420, sold at 425. Because I'm like, you know what? This is a follow-up buy. I've noticed actually this year too. If you ever notice yourself like, oh, look at this clean setup, but you see all of this, or you already saw the breakout, you missed it. And I found them for me when I start taking these secondary trades, because in this case I hit it, but most times I miss them, then these are a lot higher risk, and the probability of these things reversing is a lot higher. So nowadays, I don't even take these. I try to avoid these kinds of trades because you already had the big winner. The money was made. The easy money was made here. So getting in here, who knows what's going to happen? I don't know what let's see what the end of day chart is. Yeah, there he goes. So this thing wasn't moving, it was slowing down, volume was dropping off. I sold out. I'm like, this thing's not doing it right. And it fell back to $4, and that was the end of the day. So beautiful winner from 340 up to 420. Had my, whatever it was, 13,300 shares. And yeah, played it really well. So that was $5,800 return. That was number 2 on the year. And just a great example of if you find these unique situations. Again, Fannie and Freddie did this once before. It's the only reason I recognize this setup. I lost $1,000 trying the first bottom, and then I caught the second one. But these bottoms, actually now I try to avoid them altogether. In this case, this is a very rare, like once a year, if that type setup, where you can see so much mass, there's so much selling going on that the pops are going to be quick and profitable if you can catch them. But in most cases, I don't even touch these anymore. It's just so much risk. You never know, and most of the time they end up going lower, or it's hard to really capture the risk reward. So if you buy it, you miss it the first time. Okay, try it again, buy it, miss it the second time. Okay, try it again, buy it, miss the third time. You can, next thing you know, you tried the stock 5 times, you lost 5 times, and you finally get your winner, and then you end up taking you take your profits too quickly, and next thing you're flat on it. It's like, was that even worth it? Probably not. So in this case, it worked out well for me, and it was a great trade. Was really happy with this one in the end. And then number 1 trade of the year for me, BlackBerry. BlackBerry right at the beginning of the year. So it looks like I sold this one right at the kickoff. This bought it actually late in 2013 and sold it in the beginning of 2014. So here's BlackBerry, and this was a wild one. So BlackBerry had gotten crushed, just crushed, as everyone knows, because their phones suck and they lost the race to Apple and all that. And I have a ton of notes in this one. But what happened is every single morning, pretty much, you could read headlines on BlackBerry and why this company is just going to the gutter, it's going bankrupt, blah, blah, blah. Stocks just sucks. What happened was the company posted earnings. And here's the intraday action. So actually, let me show you the daily first. Okay, so here's the daily. Here's BlackBerry just getting smashed, just clobbered. Trades down, and right in here, there's so much bad news. The stock's been so thrashed and whacked, and it has this reversal day here. Big volume, comes in, and this is heading into earnings. And then the stock posts earnings, and this is the end of the day. So when the stock posted earnings, it gapped, I think, down or gapped up a little bit. I'm going to pull up the intraday. Point is when this thing opened up for trade, downgrades. There were news headlines across the board. The stock, oh, BlackBerry, another crappy corner. The stock's going down, blah, blah, blah. Negative, negative, negative. Not one positive headline. Not one. So there he goes. Yeah, stock gaps down. And look at this. Before the market opens, starts just ripping up. It actually ends up opening higher, up to 650. And I'm going, huh. So here's this stock that has negative headlines, negative news, downgrades the whole kabang caboodle, And this stock just reversed its earnings. It's just horrendous earnings, massive losses, the whole show. And it reversed it and it's going to open up? I'm interested. What's going on here? Someone knows something I don't. Once you do it, stock comes up, just gets sold off. Big time. But volume drops off, drops down to 610, and then it bottoms, creates a nice little flag here, higher highs, and rips right up to 650. And I'm going, this stock's going higher. There's no way that all this negative news, this stock cannot go higher from here. So actually, I took a lot of risk on this one. I bought 1,000 shares at fresh highs on day, fresh HOD. In retrospect, I could have put 10 cents of risk on this stock and still made money because it broke 650 and it was gone. This stock did not look back. And so then there it goes, buy at 650. And then I started adding on. I bought this thing multiple times. Bought at 650, bought it at 740, 782. I tightened my stop on here. This was not, I know it's a higher risk, but I raised my stop. I keep the original stop in here for the calculations, but I did tighten my stop on this. At any rate, bought 1,000 more, 740, 1,000 more, 782. I ran this thing up to almost 10 bucks. And let's see. Okay, here's the final story on this. There's the big earnings day. Again, this thing could not find a positive headline or upgrade it couldn't buy one. I buy right in here, buy my 1,000 shares, just rips up during the day. 3 days, look at that, 3 days, 3 days, takes a breather, and it holds on to those gains. I'm interested again. Look at this thing. It's just ripped up, and now it's holding on those gains. I buy more. I only risked 10 cents on this. I bought it intraday. And then there it goes, settles back up. How can this stock, with all this negative news, be holding on to these big gains after the worst earnings quarter in God knows how long, breaks to highs, fresh higher highs, I should say. I buy more, and then nice, was it 1, 2, 3 day run, and reversed. I sold into it again. I actually almost caught the peak. And then I held on. And then it consolidated again, found support of the 10-day moving average, gapped up, and I'm looking at this 2-day moving average as big resistance. Here's a stock that went from $6 up to 10. What more do you want? What more do you want? So I sell into it. I'm selling into this. I don't care if the stock goes to 15. I just ran this thing. And the stock had some headlines started coming out, and you can watch that too. It's why I always track the news. Look at this. I always put this. Oh, I'm on PBYI. Let's look up BlackBerry. I always put the news in here. In fact, it looks like, I wonder if Market Smith deletes news after a while. I'm not sure how that works. But I always like to put the news and headlines in here because then you can see, and go back to this and see how the stock reacted. So the news was coming out, and this stock was reacting positively. All of a sudden, any sort of news, regardless if it was, maybe 5 years from now we can make money, the stock was ripping higher. I'm going to sit in that. I'm going to ride it, see how far this train goes. So I ended up selling into 10 bucks. And let's pull up some more charts here. News pop. Oh, did not change the show, just note for future reference. Okay. Those buy opportunities. Okay, that's just more for my notes. And here is a 60-minute chart. So here's that earnings day reversal. I'm buying in right here. Rips up, consolidates, holds on those gains I bought right here. I put my stop like right here. Settles in, consolidates higher, breaks again, bought more, and started selling into here. And then, opened up right at the gap, right at the opening bell. I was selling this thing, and then I sold the rest in here and walked. And that was it, biggest trade of the year. Made $6,600 on that. And despite it saying 1.86R, that's not the case. I did far more than that than my original risk. Phenomenal trade, 3,000 shares. And yeah, just a great story of just recognizing all that negative news, all that drama could actually be something else going on underneath the surface, and end up being a squeeze and then some positive news, and it was just a beautiful trade. So proud of myself there for BlackBerry. But yeah, those are my top 10 biggest winners of the year. And for my own reflection, it's a pretty clear story that I did okay this year. I had a ton of losses. I was a little lower than my normal winning percentage. Again, my winning percentage is usually in the low 30s. That's okay. but I was very disciplined at cutting those losses short. And despite having 321 losses, 6 of them I lost focus, lost discipline, and it costed me $8,000. Costed me $8,000 from losing discipline for 6 trades out of the whole year, out of 442. And that's all it takes. That's all it takes. And then on the flip side, you have one big trade like BlackBerry. If I would have missed that, or have not been at my computer, or was too nervous or shaken up or I would have missed the biggest trade of the year. One trade ended up making me $6,000. So it's a good testament to just looking at those biggest winners and losers and seeing what happened there. And for me, I tried 3 different, 6 trades, biggest loser. 3 or 4 of them were, I'm going to try a new strategy because somehow I can justify in my head that I'm going to risk $1,000 to $2,000 to even $2,500 on a trade because I think this is going to work. This is to work. No, this other stuff's not working for a couple months, so I'm going to go back to this and this is going to be successful. You pay for it. I paid for it big. It's my own fault. And I don't say it ruined my year because I still made money this year. But it did. It's a big lesson. So for me, I got to take those 6 losses and look at them and say, okay, heading into 2015, I want to get my mistakes down. That's 25%. 1 out of 4 trades doesn't make a mistake. And it doesn't have to be a big one like losing over $1,000. It can be something little, as in I wasn't disciplined. I sold the whole thing out instead of selling half, or my entry was bad, or I missed a buy altogether, or I just took a trade that I shouldn't have. I was emotional. And so if I can, that's my goal is 2015, lower than my mistakes and stay disciplined. If I can avoid those 6 mishaps out of 321, if I have the same results next year, I'm going to have a fantastic year and I'm going to blow out the market averages. And despite this late market rally here, almost beat the market averages for my small $60,000 portfolio. But I'm ending the year on a high note and feel pretty good about it. And just now looking in, I started the stream with my P&L, and you can see how that's just big to start the years. And you can see how letting those runners run can make such a big difference. I mean, look at this. There's probably like 30 losses in here. It doesn't even make a dent. And all it takes is boom, winner, winner. You can see the spikes. And then here's my big losers. Boom. Those are just brutal. And I like to overemphasize it just so I like to drive the message home to myself, which is why I love Ticker, because now I can just stream it. And hopefully you get something out of this. Hopefully you can apply it to your own trading. For me, it's about just looking at those past trades, looking at those biggest winners, looking at those biggest losers, reflecting on them. I've now taken those lessons to heart. I apply them to my rules. I have strict rules in all my trades. And now I know that in fact, I think it happened towards the end of the year. I'm like, all right, I'm going to try this new strategy again, da-da-da-da. And I'm like, whoa. Wait a minute. I've already made this mistake once. How much risk am I taking this? Avoid it altogether. And that is me making progress in my own simple little world of being a part-time, hobby enthusiast investor. So we'll see what happens next year. Hopefully I can have stay disciplined, remove some of these big mistakes, and have a good year despite the market. And maybe even scale my portfolio size. But I'm going to keep it small, around 60 grand, until I can prove to myself that I can stay disciplined, prove to myself I can keep my risk in check, prove to myself that I can follow my rules and avoid myself. So you are your worst enemy. Awesome. Thanks, Penn. Appreciate it. Appreciate the compliment. So hopefully you guys can get something. I have no problem being transparent, just because if this is applied to me, it only helps to maybe you can get something out of it as well. And I have no problem sharing how I did myself. So so I encourage you again to go. I don't care if it's in our trade log or in Excel, but go look at your past trades, check them out, and see what you can get out of it. There are lessons in there. There are new things that you can pull from it. Thank you, awesome, thank you, appreciate the support. Thank you very much. So yeah, click that follow button. I am gonna. Well, this is my big stream tomorrow night. Kunal and I are gonna do a joint stream on the top 10 biggest stories of 2014, the top 10 biggest stories of 2014. That could be from oil crashing to, so on and so forth. I don't want to get into them all. But it's going to be top 10 biggest stories 2014. Smatrona, I think it's at 8 o'clock. I'm going to post it on the blog, and that's going to be on Kunal's stream. I think his username is Kunal00. I'll post up the link. So it should be fun. We have a lot of these New Year's type streams going on. And Ebola, exactly. Gold, exactly, Dr. Chiz, exactly. So check it out tomorrow night. It should be good. And wish everyone a fantastic heading into this new year. But I'll see you tomorrow night. Thanks for tuning in. Click that follow button if you haven't already to see when I'm streaming next. Appreciate the support. And here's to all of our success in heading into 2015. So have a great night. Thanks.